In our last two videos, we discussed about how to identify the valid highs and lows in the market. And we also talked about the true smart money change of character. If you haven't watched these two videos, please go watch them before you come to this one, so that you can understand everything that we are going to be discussing about in this episode. Okay? Now, the financial market is not a level playing field. The forex market in particular is a zero-sum game, meaning that someone has to lose for another to win. What actually drives the market is liquidity. Liquidity and structure are the cornerstones of the market. Now, in this video, I'm going to show to you the true concept of liquidity and inducement. If you don't understand these two concepts, then the forex market might not actually be for you. So if that sounds like something you want to learn today, please stick with me just immediately after this intro. Hello and welcome back. This is RALLYTOP Investing. In today's episode, we are going to be discussing about liquidity and inducement. As you know, liquidity drives the market. The smart money or the large financial institutions will not move price until and unless there is liquidity to be purchased. And if you don't understand where these liquidity pools are, you will always become the liquidity in the market. And that's why in this episode, you need to pay very close attention so that you can understand. Now, what is liquidity? Liquidity is floating money in the market. That is, liquidity resides where you have large stop orders, where you have large pending orders like market execution, buy stops, sell stops, and of course, stop losses of retail traders. Okay? So this is a basic definition of liquidity. Liquidity, all right, takes a trader out of the market. All right, it takes a trader out of the market. Now, what is inducement? Well, as the name implies, inducement is a concept that forces the trader into the market. All right, too early. Please, I take that again. Inducement forces the trader into the market too early. That is, a trader takes a position in the market too early. And I'm going to explain all of that. So that is the difference between liquidity and inducement. Liquidity takes a trader out of the market, while inducement forces a trader to come into the market at the wrong time. All right? Or if you like, it forces a trader to come into the market too early. All right? So these are the differences between the two, liquidity and inducement. Now, let me explain by using this diagram here. First of all, take a look at this diagram. If you had watched our first video on how to identify valid highs and lows, and if you haven't watched that, please go back and look at this that video so that you can understand what we are discussing here. Now, I've told you in that first video, all right, in the video about valid highs and lows, and I'm going to leave the link in the description. I told you that in an uptrend, for a high to be confirmed as a valid high, such as this high, for it to be confirmed as a valid high, okay, for this high to be confirmed as a valid high, okay, it has to take out the first internal structure low. And I told you the first internal structure low is here. This is your first internal structure low. Price has to take it out. for this high to be confirmed as a valid high. I want you to understand that. Okay, that is in an uptrend. It has to take out the first internal structure low. Now, this first internal structure low is what is known as inducement. This is what is known as inducement. Why is it an inducement? Well, it is because if you follow the books tell you once there is a break of structure. Now, for instance, there is a break of structure here. Once there is a break of structure, all right, the books tell you that there will be an OB sitting somewhere here. All right, so the retail trader will look for their OB somewhere here to take trades from. All right, and they do not understand that this area is inducement. All right, this area is what? Inducement. I want us to understand that very, very well. Okay, that is an inducement area. So you don't need to take your trade from here. You don't mark any other block here to take trades from. All right, now remember, where you mark as a break of structure or as a high and a break of structure is not correct. It's not a break of structure. It is a retail break of structure, or if you like, internal structure break of structure. All right, the actual high is here. This is the actual high, and this high can only be the actual high if it has come down to take out inducement, which is your first internal structure low in the case of a bullish structure. I hope you understand that. So that is your inducement. Now, after this inducement, you can go ahead and mark out your OB after the inducement. If you find a valid OB sitting here, then you are free to take your trade from that OB after inducement. Please take note. Do not enter the market or take position in the market when inducement or liquidity has not been taken. Otherwise, you will become the inducement or the liquidity for the market. All right? I want you to understand that. So after that, you can take your trade from this OB here. All right? Now, there are only two places you can mark out OB on your chart. All right? Remember, this is one leg. The whole of this, from this low to this high, is one straight leg because this is not a high. And therefore, this is not counted as a structure. This is one straight leg. All right? And within this one straight leg, you have these minor structures. All right? These minor structures within this one straight leg. Now, the first internal structure low is your IDM, which is your inducement. And then after inducement, you can take your trade from the OB. If there is a valid unmitigated OB here, then you can take your trade from there. Okay? That's the first point that you can mark as your point of interest. All right? Now, after this point of interest, after this OB here, that is after this inducement has been taken, all these other points, all right, all these, there are liquidity for the market. There are liquidity. And I want you to understand that this is liquidity for the market. And this is also liquidity for the market. This one also. All right. You don't need to take your trades from there. All right. These are liquidity in the market, especially if there is an unmitigated valid OB that is sitting below these points. All right. Once there is any unmitigated OB sitting below this point, then this is what is your liquidity. You don't need to take trades from there. I hope you understand. I cannot emphasize this enough. If you take your fib tool and measure from this low to this high, all right, it will give you, now let me change the color of this, because, okay, so if you take your fib tool from this low to this high, all right, you will realize that this is your discount zone, all right, and so you want to buy from the discount zone. So your extreme OB is usually a high probability OB. Will this OB not work out? Well, sometimes it does. It works out. But this OB is not as high probability as this one here. All right? And you need to understand that very, very well. So that is the concept of liquidity and inducement. All right? when you are trading the smart money concept. Now remember, liquidity also lies below or above every equal highs, equal lows. But more importantly, liquidity lies below every high and low in the market. All right? So that's the first example. Now the second one is this. Now, as you can see, price tap on this, your extreme OB, and reacted off of it and begin to create higher high, higher low, higher high, higher low, higher high. Now remember, this is your valid major structure high. All right? This is a valid major structure high. This is your major structure high. For this low to be confirmed as a valid low, it has to take out this major structure high with a candle body close. All right? And as you can see, it has taken it out with a candle body close and printed this high. This high can only be confirmed as a valid high, all right, if it takes out your first internal structure low. This high cannot be confirmed as a valid high until it takes out the first internal structure low. And as you can see, the first internal structure low has been taken out from there, all right? And when it took out the first internal structure low, all right, I've told you your OB will be sitting after inducement has been taken. This is your inducement, guys. After that inducement has been taken, then the next OB is your a valid OB that you can take trades from. All right? And then after then, you now have the extreme OB, perhaps sitting around here. There are only two OBs that work. All right? Two OBs, and I want you to understand that. So this could be the next OB you will look at. All right, this is one straight leg from this low to this high. It's one straight leg. All right, now in this case, this is your extreme OB, and this is your OB after inducement. All right, in this case, price comes, tap into this OB after taking out this inducement and reacted of it and move back up. Can you see that? In this case, it violated this OB here. These are the only two OBs that you need to look out for when you are analyzing the market. All right? So the same thing with the downtrend. It's exactly the same thing. This is not your low, and this is not your break of structure. Now, this is your valid low. Why is it? For this low to be confirmed as a valid low, I want you to always remember that for this low to be confirmed, all right, as a valid low, it has to take out the first internal structure high in the case of a bearish structure. And this is your first internal structure high. So it took it out. All right. After taking out that first internal structure high, then you can mark your OB. This first internal structure high, in the case of a bearish structure, is your inducement. All right. Now, after that, you can now mark, if you find a valid OB, you can now mark your valid OB out. All right. And as you can see, price came and tapped into that OB. Now, after this OB, now remember, this is your supply zone. So I can change the color now because it's your supply zone. All right. Okay. So after this OB, after taking out this inducement, the next valid OB is here. And as you can see, price momentarily reacted off of this OB and came down a little. Before you know it, it went back up. Why is it? It is because there is an unmitigated OB up here. All right, a valid unmitigated OB up here. Once there is an unmitigated OB up there, this very first OB will become 50-50 chance. All right, and after that, look at this is your liquidity. You don't need to place any order here, guys. This is your liquidity in the market. All right, that's your liquidity in the market. You have to wait for the liquidity to be taken before you now take trade from that OB. All right. I want you to understand this thing. I hope this thing is clear to you. Now, as you can see, price took out this inducement, all right, reacted off of this first OB momentarily, and then went up to take out this liquidity resting above this high and tap into the extreme OB before dropping. All right. Now, look at this again. Is this a valid low? For this low to be confirmed as a valid low, it has to take out the first internal structure high. All right. Now, in this case, retail SMC traders will mark here as their OB. That's why you see me mark this OB, all right, as incorrect. This is an incorrect OB. Why is it? Because price has not taken out any internal structure high here. Now, make no mistake. I've told you this before. Let me say it again. This is not your first internal structure high. This is not it. Okay? It's not your first internal structure high. This is null and void. All right? This OB here is smart money trap. Smart money trap. You don't need to go for it. All right? This low, for it to be confirmed as a valid low, it has to take out this first internal structure high. This is your first internal structure high here. And as you can see, price didn't get there. Rather, it now went down. And people mark OB here. And because price reacted off of this OB and went down, does not mean this is the right thing to do in the market. All right? The market sometimes can reward you for wrongdoing, for the purpose of clearing your account later on. I want you to understand that. So this is what is known as liquidity and inducement in the market. Now let me quickly show you some examples on the chart. Maybe 1 or 2 examples and we call it a day. All right. As you can see, we are completely bearish. The market is completely bearish. As you can see, it's completely bearish. Now, let's look at some structures here. The first thing you need to do when you get to your chart is your structure. All right. That's the first thing, your structure. So where is the structure here? Well, as you can see, here is a low. All right. Is this low a valid low? Well, it can only be a valid low if it takes out your first internal structure low, which is your inducement. All right. And as you can see, it has taken out that inducement. All right. So this becomes your inducement in the market. Okay. And it has been taken out. All right. That has been taken out. Now, confirming this low as a valid low. Can you see this? It confirmed this low as a valid low. All right. Just a minute now. So it confirmed that low as a valid low. All right. And therefore, if price now takes out that low, it becomes a break of structure. So we can now place an horizontal line there, hoping that because price is bearish, hoping that price will continue to go bearish. All right. And after taking out this inducement, price travel back up and form this high. As you can see, it formed this high here. All right. Now, remember, this low, this very low, this major structure low here cannot be confirmed just yet until price now closes below it. All right. Now, this high cannot be confirmed. I meant to say this high cannot be confirmed just yet until price closes below this major structure low here. This is a major structure low. All right. Now, once price closes below this major structure low, this high will be confirmed as a valid lower high. All right. I want you to understand that. So now price, as you can see, had come to close below it, and therefore this becomes your major high. This becomes your lower high in the market. All right. That becomes your your lower high in the market. Okay. So now let me show you something. Now price came back down and then it formed this low after taking out this after this is known as chop. A break, boss. Remember, this is boss. Always remember that break of structure, because it has taken it out with a candle body close. That's your break of structure in the market. Now after that, look at this low. This low was printed. Is this a valid low? Certainly no. This is not a valid low. Because why? There was no first internal structure high that is taken. All right. Your first internal structure high that should have been taken for this low to be confirmed as a valid low will be this. This will be your inducement. All right. This will be your inducement in the market. This will be your inducement. All right. But price didn't go back up. To confirm this low, price had to go back up to take out this inducement before this low can be confirmed as a valid low. All right. And that didn't happen. And before you know it, price created another structure. And therefore, our inducement will be transferred from there to this point now. This is now your inducement. All right. This is your inducement. Again, if you don't understand what I'm doing, please go back to that video on how to identify your highs and lows in the market. I'm going to leave the link in the description. Please make sure you see that video before you come to this one. All right. Now, for this low to be confirmed, this inducement has to be taken out. And as you can see, price didn't take out that inducement. Before you know it, price violated this low and came down. and created another low. Now, when it created another low, where is your inducement? All right? Well, your inducement will be transferred from here to here. Let me see. Okay. So your inducement will be transferred from there to here. This is your inducement. Okay? So that's your inducement in the market. All right? If you don't know how we arrive at that, go back to the video on highs and lows. So that's your inducement in the market. It's transferred there now. Why? Because price has taken it out, confirming this low as a valid low. All right? Is it? No. Sorry, guys. That's not the inducement. That's not the inducement. This is your inducement in the market. I'm sorry. This is your inducement in the market. All right? That's your inducement. And as you can see, that's your inducement. That's your inducement. And as you can see, price didn't travel back up to take out that inducement to confirm this low. All right? And before you know it, a new structure was created. And now we are here with this low. All right? Now, with this low, where is our inducement? Our inducement will be transferred from here to this point. All right? That's our inducement. And as you can see, price has taken out that inducement. All right? Confirming this low as a valid low. This is now your valid low in the market. Can you see what we are doing? That's your valid low in the market. Okay? And therefore, because that is your valid low in the market, so we have, look at what we have here now. We have our high here and we have our low here. All right? After you mark your inducement, where is your OB? Where is your OB? Well, your OB could be here. Look at this. You can mark this out as your OB after inducement. But you don't want to enter, because a lot of guys would think that because price has broken structure here and then their OB is somewhere here. No. So after this structure, all right, where is your OB? This is your most current OB after that inducement. So you could have taken trade from there. And as you can see, price reacted momentarily and came down momentarily. All right? Did it? Okay. Eventually, price respected that OB. So that's your first OB. All right? And remember, your OB must have imbalance for it to be a valid OB. I'm not talking about OB just yet. All right? Now, so price reacted off of that OB, but that is the first OB you could have taken trade from. And your extreme OB would have been this. All right? Because from this high to this low is one straight leg. So your extreme OB, let's see where your extreme OB would have been. You start from the top to look at your extreme OB. All right? Now, this would have been your extreme OB. This would have been your extreme OB. All right? But as you can see, price reacted off of the first OB after inducement and drop. Can you see that? And this is your break of structure. This is your break of structure. Confirmed break of structure. All right? Why? Price closed below it. All right? So you can now confirm this high as your valid high, because price has come to take out this major structure low with a candle body close. So this can become your boss. This will become your boss. And where is your high? The high that sponsored that low. Please remember that. Now, this is your high. This is your new high now. All right? That's your new high. Okay? This is your low, your high. This high sponsored the move down that broke structure here. Can you see that? So that's how to look at the market. Now, let's continue. And then after breaking this major structure low here, take a look at it. It created a high. Is that a valid high? No, it's not. And it created another one. Is that a valid low? I mean, is this a valid low? No, it is not a valid low. How about this? Is it a valid low? No, it's not a valid low. All right? Now, we move ahead. Where is your valid low now? It created another structure here. Or it first created this one. Is this a valid low? Is this low valid? No, it's not valid. How about this? Is it valid? No, it's not valid. Why are these lows not valid? Because it has not taken out the first internal structure high. All right? Now, until it produces another low here. Look at another low here. All right? When it produces another low here, all right? This is your inducement. That's the first internal structure high. This is your inducement. All right, as you can see that after that low, no price came again to violate it just yet. So this is your inducement. And after this inducement, price travel back up. All right. Now, remember, your range is from this high to this low. All right. You don't need to mark everything as break of structure, and all that. This is your range. From this high to this low is your range. All right. That is your valid range. Okay. Now, after it took out this inducement, what happened? Mark out your OB. All right. Mark out your OB. Well, in this case, your first OB would have been here. After inducement, always remember that your valid OB, let me see. Price came down. Yes, your valid OB would have been here. This would have been your valid OB, guys. All right. But as you can see, price blew through that OB. I've told you that's your first OB you would have marked. All right. And then your extreme OB will be this. Let's see your extreme OB. Everything is mitigated here. Let's see. Everything is mitigated. Everything is mitigated. Everything is mitigated. Okay. Okay. So this, okay, we could have used this as your OB because everything is mitigated. So the magic of the candles is what you will use here. All right. Because everything is mitigated. So this will become your OB. But I don't know whether price came to respect that OB. But let's see. And as you can see, price came down to respect that OB. It first respected it here, came down, all right, went back up, respected it, and came down. Now, if you scale down to the 1 minute time frame to take this trade, you would have gotten a very good trade from here. And even here, you would have gotten a very good trade until now price came back and took you out, all right? So that will be your two extreme OB. Why? Because everything here is mitigated, all right? Everything is mitigated except this week here that we have. This is hidden OB. All right. And there you would have taken your trade from there. All right. So after this low, look at it. Price violated the structure again. This high will not be confirmed until structure. Let me remove these things so that it doesn't confuse you. Let me remove them. Now, after that, take a look. Price came and violated the structure. This major structure here. Remember this major structure? Price now violated it downward. All right. Price violated it downward. Okay. So take a look at this. After this is a low. Is this a valid low? Check. Is this a valid low? Yes, it is a valid low because it has taken out the first internal structure high. Look at this first internal structure high here. It took it out. All right. With a wick. Okay. It took it out with a wick. So this becomes your inducement in the market. All right. I hope you understand what we're discussing now. Please try and understand. That's your inducement in the market. All right. It took it out to confirm this low as a major structure low. Am I correct? Yes. It confirmed it as a major structure low. All right. So this becomes your low in the market. Your major structure low is now here. So we can place this ball there to confirm that that is your major structure low. And this your high cannot be confirmed until it comes down to break this structure here, this major structure low here. And as you can see, it broke it. And therefore, this becomes your new high in the market, your new lower high in the market. All right. That is your trading range. All right. And now, all right. So when price broke through this, let's see that. When price broke through to form this low, this valid low, and remember, you have taken out inducement here. Okay. So where is your, after inducement, where is your OB? Well, your OB will be somewhere here. Look at it. This will be your OB. All right. This will be your first OB. Okay. That will be your first OB. I don't know whether price tap. Okay, price tap into it. Can you see that? That will be your first OB. All right. That is your valid OB. Is it your valid OB? Let me see. Yes, that's your valid OB. And so price tapped into it after taking out this inducement and drop. Can you see that? All right, that's your first OB within this leg, this high and this low here. So where is the extreme OB? Now, your extreme OB would have been this. Remember, only 2 OBs work in this market. All right, only 2 OBs work in this market. So this would have been the wick of this candle, would have been your OB. This is your OB. But as you can see, price reacted off of the first OB and dropped. All right, so and this is allowed. Okay, so this is how you identify your inducement and your liquidity in the market. Remember, after I marked inducement is your OB, and after that OB, now your extreme OB, all these ones are liquidity. I want you to know it. All the old highs and lows are liquidity. This is liquidity, guys. This liquidity in the market. You don't need to take trades from there. Okay, this is that's liquidity in the market. All right, you don't need to take trades from there. Now let me show you another liquidity in the market. This is another liquidity. This is liquidity, guys. You don't need to take trades from there. All these are liquidity in the market. Let me show you another liquidity. Look at it here. All these are liquidity. You don't need to take trades from there. All right, the only OB that works is the OB after your inducement and then the extreme OB. I want you to understand that. All right, the extreme OB is the high probability OB, more than this first OB after inducement. But do not enter the market without inducement being taken. Otherwise, you will become the inducement. Don't enter the market without liquidity being taken. Otherwise, you'll become the liquidity for the market. Okay, guys, I hope you have learned something new here. Now, if this video adds value to you, please don't forget to give us a like. Please, you guys have not been giving us likes. We take time, we spend resources, a lot of resources to produce a video like this. All that you can do for us is to give us your like. Please, it doesn't cost you anything. And then if click on the, if you are new to our channel, please click on the subscribe button. All right, become part of the family and turn on your notification so that anytime we publish a new video, you'll be the first to be notified. All right, and if you want to learn the way we trade, please take advantage of our private mentorship course. All right, and join us to learn how to trade the true smart money concept. All right, if you have not joined our free Telegram channel, our new free Telegram channel, please do so. RALLYTOP group. I'm going to leave the link in the description below. Go there, become part of the family, because right there on our Telegram channel, we post high probability daily setups. If you want to make money, all right, to have money to come and join the mentorship, please become part of our Telegram group. And because we are posting daily trade setups, and there are high probability trade setups, all right, become part of that family, and you will be glad you did. All right, guys, I see you in our next educational video.